Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today. October 24th, 2023. Let's see what's going on in the market. Even the S&P is up 24. You can see that they are just about mid-range for the day. They've been as low as 42.42 and as high as 42.83. NASDAQ up 95 and the Russell up 13. Dow up 211. The canary in the coal mine. That's volatility, down 22 cents. I would expect with the market catching a little bit of a bid here, that volatility would be down more like 3%. It's only down 1.25%. So maybe, just maybe, this market doesn't have the legs that it's showing right now. Hopefully I'm wrong. All right, what am I going to show you here today? Well, I want to go through an exercise that allows you to use less buying power in an IRA account. I'm going to go to a stock that's high priced. That's Goldman Sachs. It's a $300 stock, usually out of the reach for most people in an IRA account because it uses so much buying power when you're selling naked options. I'm going to show you how to kind of simulate the same type of trade in a margin account, in an IRA account, that you could do in a margin account. You can see here that the IV rank over the last 5 days is unchanged, and Goldman Sachs does not have earnings. So it had earnings, and volatility has not contracted in Goldman Sachs. The IV rank of 25 is good, not great. What I'm going for here is I'm looking at it as I'm put on a trade in Goldman Sachs where the volatility is matching that prior to earnings. So our earnings usually have high implied volatility. Now it's after earnings, and the volatility hasn't come down as much. You can see that here's where volatility is, and over the last couple of months, as a matter of fact, you got to go all the way back to March to find a higher implied volatility than what you have right now in Goldman Sachs. Stock is up $1.09. I typically prefer the stock to be down when I'm placing a position like this because I am going to go omnidirectional, slightly bullish on here. I am going to go to December because we like to do trades closest to 45 days. 52 days is 7 days away from 45. And obviously November monthly options only have 24 days. We're looking to close, roll, or bring a trade to December when we get around 21 days. I'm not going to trade the weekly options, especially in a product like Goldman Sachs, where even the markets in the monthly options can be 10 cents, 15 cents wide. So you get a little bit of a wider market in Goldman Sachs. I did just get filled on this trade at 2 different prices. I am now fully filled. I set my prices at different more credit because in Goldman Sachs, sometimes, as you can see, the stock moves 20, 30 cents at a time. So I wanted to take into consideration for that. What did I do? Well, my first tranche, I'm looking to buy 1 put, sell 2 others. I mean, this is an IRA account that I'm showing you right now. So it's going to show you the high buying power, and we're going to reduce that buying power to simulate the buying power in a margin account. So I'm buying 185 put, selling 2 of the 80 puts. Now you can get $3.45, and typically in a margin account, this would use around $3,900. But as you can see, in this IRA account, it's using $27,100. So you have to go out and buy a wing. I've listened to your questions and your comments on YouTube. If you leave them there, and I try to do my best to answer them individually, but I thought maybe we could throw this out here for everybody, because if you have the question, probably everybody else has the question too. So what I'm doing here is I'm going out and buying a 230 put. So now I have defined risk. Now, is it really defined risk? Yes, it most certainly is defined risk. I can't lose any more than the $4,200 that I'm using in buying power. For that, I'm taking away around 45 or 50 cents of the credit that I got filled. As a matter of fact, I got filled on this at $298 just a moment ago with the stock right here, and I got filled at $293 actually when the stock was a little bit higher. If you go down here to the follow page, you'll see that I try my best to put everything that I do in a timely basis up there. I just got filled a few moments ago at $2.93. I bought a butterfly. It has an 84% pop. I put in here that it's a simulated omnidirectional bullish ratio spread using a similar buying power as a margin account. And that's exactly what I'm doing. I told you on the trade that in a margin account, it would have around $3,900 in buying power. I'm using $4,200 in buying power. You certainly could go one strike closer and use less buying power than a margin account. Of course, you're going to take away another dime of credit. It does not change your pop that much. It does not change your delta that much. As a matter of fact, when I look at this trade, I pretty much in my own mind take away that option that I have as my quote-unquote protection, or for my case, using less buying power, and say that this position has around 18 long deltas. It has an 84% pop. My max profit is $845 because that's factoring in that I have that long embedded put spread. You know, I've done these trades many times on this podcast. They are very high probability trades. They are omnidirectional because you can make $850 if we close right at 280 at expiration, 52 days away from here. I think that's completely unrealistic. I'm not going to hold this trade for that long. I hopefully will be out of this trade in 2 to 3 weeks. That's my simulation. That's what if things work out well, that's what I'm going to do. I, again, bought this 230 put to use less buying power. I'm using $4,200. You can see it doesn't change the pop that much. It does change the max profit by the price of this option. If you have the buying power, then maybe you don't have to use it. If you're in a margin account, I certainly wouldn't look to buy this 230 put. But if you're in an account where you're looking to use $4,000 or thereabouts, just like it would be in any margin account, you are not disadvantaged in any way. Your break even on this trade is right around that 1 standard deviation. I love to be just at or outside that 1 standard deviation on one side. I got filled at 298 and 293 for an average price of around 295. You certainly can get filled on this too. You have to be a little bit bullish, omnidirectional. Break even, you have to like it under 275. If that doesn't fit your parameters, then this is not a trade for you. If this uses too much buying power, that's not a trade for you. But I showed you at least how you can certainly simulate any trade in an IRA account to use less buying power as long as you're willing to buy that one little wing. And you know what else I would like you to do? Please open, move, transfer, bring your account to Tasty Trade. Help us keep the lights on at Tasty Live.